It is on and active. So, what do we do? 187, earnings tomorrow morning. What is the expected move here, guys? Okay, Jack, John, you guys are in agreement. Anyone else? Okay, good. If we look at the 187.5 straddle, which is trading $10.50. And we're about 50 cents away from the strike, so right about 10 bucks. Okay, stock is 187. Expected move is 10 bucks. Puts us in a range then of 177 up to 197. Okay. Anything of note? Well, not a ton of areas of support that I see here until you really get down to about 173, 174. And in terms of resistance, you've got the 200-day right here just above where the market's trading, and then you've got the 50-day right up at 197. So support and resistance here, I think, are, not going to play much of a factor. Any other pattern you guys see that you can identify here? Anyone? Yeah, you definitely had the crossover here. So I see lower lows and lower highs. Okay? So even back here, and this was the big market sell-off, okay? We've gotten back up to a nice level, recovered really, really nicely, 60 some odd dollars. But if you isolate just even the recent pattern here, you've got lower lows, lower highs. So I look at this here and I say, from a technical standpoint, I'm pretty bearish. We could do that too, Tariq. But this looks pretty bearish to me. Now let's first see, what a neutral iron condor might be trading. But I'm certainly looking at this being very biased towards the downside here. Okay, expected range 177 to 197. If we look at an iron condor for 1 day here, let's see. Okay, this is not bad. the 180, 175, and 195, 200 iron condor is trading about $2.40. That gives us break-evens of 177.60 up to 197.40. So a little bit light on the downside, right there on the upside. At almost a 1-to-1 reward to risk. So that could be kind of tantalizing. I like that a lot. Everybody see what I'm talking about there? Now, I'm going to show you something else. If we like the iron condor, which I do here because I think it's pretty expensive for a one-day iron condor. Okay, if we like the iron condor, and I'm going to show you this on the screen here, but I just have the strikes adjusted to make this more bearish. So still an iron condor, but more bearish. So the 177.5, 172.5, and 192.5, 197.5 iron condor is about $2.40. Okay, so that really helps with the downside break-evens, because the break-even on the downside now is 175.10. It cuts the break-even on the upside, but that's the intent of doing this, is that intentionally it would be a bearish setup, but still playing both sides. Okay, and you can see that right here. Okay, so does everybody understand this concept of an iron condor? Still looking for range bound, but it has a definite bearish bias to it. See you, Jay Tano. Have a great one. Okay, now let's look at both just a regular put spread and perhaps a calendar put spread. Okay, so if we're targeting on the downside 177, right? Let's take a look at a calendar put spread. Let's see what volatility is doing here. This will be a 1-week calendar put spread that I'm looking at. That's going to cost about 70 cents. So that is okay. It is just okay. Now I want to check out one other thing here. Got nothing in VMM. And this is a different calendar I'm just looking at. Okay, don't love that. And let's look at just a straight vertical put spread. We go out to next week, this $5 wide put spread, yeah, if we could get that for $1.20 or so, that's not bad at all. This is a $5 wide put spread for next week. The July 5th, 180, 175 put spread. If we could get that for $1.20, that is great reward to risk. Okay, I kind of like the iron condor though. I really like that short delta, short bias iron condor here. If we could really collect $2.40, maybe even get $2.50 on this. And I'm going to put this back up on the screen here. That's a lot of premium for overnight. Okay, this is what I'm going to send out, guys. I am going to send out this iron condor for a $2.40 credit. Okay. What 120 are you talking about, Lionel? What 120 are you talking about? Are you talking back on the put spread? On the put spread I evaluated, the 85.80 for next week? Or the 80.75, excuse me? This one? Okay, let me put that back on the board here. Okay, so here is the market on it. I'm saying if we could buy this for 120, right now midpoint is 125, doesn't mean that's where it's trading. If we could buy it for 120, it gives us great reward to risk. In terms of how do we know it's fair value? Well, the expected move in Constellation going to next week, not this week. Okay, next week, it bumps up a little bit. It's about a $12 move, so really targeting 175 on the downside. So if we want to take a bearish position, 175 would be the appropriate target to the downside. Make sense? Does that help you out, Lionel? But I really like this iron condor. I think it's a lot of premium for overnight. It definitely has that short delta bias to it, but it takes us to well below the expected range on the downside, and we're taking a little bit of a chance on the upside. Okay? Any questions? Otherwise, I'm going to put this signal out there. Okay, I'll be right back then, guys.